morning and welcome to the now 126th episode of the Veritas Fact Finding Series. And today I'm joined by my longtime friend, Sean Silcoff. Good morning, Sean.
Good morning, Anthony. How are you?
Excellent, thanks.
Good.
We're back again live to go on the ground to speak to industry professionals in an unscripted, candid video format to discover how we can make better investment decisions. If you're watching and you like what you hear, give us a like and follow us at www.veritascorp.com. I must note a quick disclaimer. This broadcast is not to be taken as investment advice, and participants or employees of the Veritas Group of companies may own securities discussed in this broadcast. And while we love all our guests, this session may contain forward-looking statements, investment opinions, and comments that we may not agree with. Although with Sean, I'm not sure we're going to go that far. Now, I'd like to talk to you just briefly about Sean. Sean and I have actually known each other. I think we roughly started our careers together at around the same time. Sean actually began reporting his career covering crime and courts in Cornwall, Ontario. Then he moved on to the National Post and the Montreal as a columnist and a Montreal correspondent for the National Post. And for those of you that remember, Canadian Business Magazine. And from there, he went to the Globe and Mail in 2012 and co-authored a book called Losing the Signal, the spectacular rise and fall of BlackBerry. And it won Canada's National Business Book Award and was shortlisted for the International Financial Times and McKinsey's Business Book of the Year. And it was adapted into a film in 2023 called BlackBerry. Sean, I'm really excited to talk about that and dig into your experiences. Why don't you walk us through what led you to where you are today at the Globe? Why is it that you do what you do?
Okay, so very quickly, why am I a journalist? I had a business degree. I came out during a brutal economy in 1992. Probably wasn't the best student, very unfocused. I had no idea what I wanted to do. My mom said, why don't you apply for journalism school? You like to write. And I did. So I did. And I got into journalism school. I didn't quite know what I was doing until I actually uncovered a story on how one of the museums locally was cheating on their attendance figures. And the Ottawa Citizen ran that story. And it was through doing that story. And that was, wow. That was 92. It was like being bitten by the radioactive spider, just like everything clicked, and I knew this is what I wanted to do for a living. It was still hard to get a job, even after I got my master's degree from Carleton. That's how I ended up in Cornwall, writing about, as you said, courts and crimes. It was a super interesting time. And I did the Globe and Mail summer internship, couldn't find a job. So I was, 26. Had 2 degrees, 2 years of experience, and the only thing on offer was another internship program at Canadian Business Magazine, paying $1,500 a month, which I think today would be like $3,000 a month. So not, I'm guessing, so not great money, but Canadian Business Magazine was an incredible place in the late 90s.
For sure.
Really learned how to do long form journalism, how to craft good feature length stories. And I wrote about all kinds of interesting things. ING was moving into Canada. I remember ING Direct at the time. I got to cover retail, and also I had a front row seat for the first .com boom. And through it all, and this sort of draws the line to why I like writing about tech. I was really drawn to writing about entrepreneurs. And the reason was because I had entrepreneurs in my life, and I admired them. I was fascinated by them. My grandparents ran a restaurant on Park Avenue in Montreal for 40 years. They started couldn't be a better year to start a business, 1932, in the heart of the Great Depression. They ran that for 43 years. I joke that they're, we talk about SaaS nowadays, software as a service. And I say that they were a SaaS business too, but it was smoked meat as a sandwich.
What was the name of it? What was the name of their restaurant?
Joe's Light Lunch. You could
Wow.
get milkshakes, you could get smoked meat, you could play ping pong in the back room, and they actually had a illegal betting den at times in the back room there. as well. They're real characters, my grandparents. My aunt was a successful retailer in Toronto. She had a handful of locations in the downtown core. My late uncle Bernie was a businessman as well, and I had another uncle and aunt who had a couple of businesses. So I had that in my family, and I was really drawn to entrepreneurs, and I loved their stories. And it takes a certain type of person to be an entrepreneur, to take that kind of risk. And so I was drawn to writing about entrepreneurs, and I got to do a lot of that at Canadian Business Magazine. And I continued that when I got to the Globe. And of course, where are the entrepreneurs these days? Many of them are starting digital companies. So that was kind of how I got into tech again, and why I continue to be fascinated by it. It's not so much about the tech, but about the people, and the crazy dreams they're trying to turn into businesses, and the financiers who are willing to help them. And of course, when you get into finance and tech, you're talking about venture capital, and that's a whole other interesting world. Getting to know the difference between venture capital and private equity. I mean, it's all private capital, but it's very different types of people. And of course, writing about tech for the Globe and Mail, our readers ultimately want to know, well, which of these privately funded companies are going to be public someday? So that's always been kind of my approach to covering tech. And that was kind of my thesis starting out. Why should we cover tech? Well, I want to write about the companies that are going to be public someday. B, I want to write about the companies that are disrupting the companies that are public today. So, the fintechs, the online commerce companies, et cetera, et cetera, et cetera. And the third bucket is like, so who's going to be public, who's disrupting the public companies, and who's hiring your kids? Because I think it's kind of neat when you're talking to a bunch of people and you mention this company you wrote about, and someone says, oh yeah, my kid was talking about that company. I've never heard of them before, and I don't understand what they do. And I can say, well, I wrote about them last week. And so I think being able to translate the bleeding edge of commerce, of business for the general reader is something that can add great value to people, to Globe readers, and help point the way forward of what where the economic growth and the job creation is coming from in the future.
Interesting. So let's now. If I pull that together, what would your mother say about you now? Because I that stuck with me. How your mom said, "Why don't you become a journalist? Because you like writing."
I got a great mom. She's very proud of me. I mean, she'd be proud of me if I was doing anything.
Yeah.
She's great. But it's I didn't necessarily know what I wanted to do in life, and I've been thinking about this recently. That I'm fortunate. I mean, things really turned out fairly well for me. I've gotten to work for great people at great publications, and some of your stories sometimes make a real impact. And it's a fun career because you really are participating in and informing people's knowledge of the world the moment things happen, or sometimes within 15 or 20 minutes. And they say the journalists write the first draft of history. I like to hope that some of my stories are a little more like second drafts. So
Right. So
you make a lot of mistakes in the first drafts typically.
So why don't we discuss sort of the BlackBerry saga, because I think your perspective on that will be very interesting, and that'll help us transition to that article that really caused me to reach out, that was published a few weeks ago in the Globe on this in the feature in the Saturday edition, that went through sort of what's going on in Canadian tech, and part of what I want to champion here to those listening is that we have a plethora of companies in this country that are actually interesting, because I like the way you characterized it: disrupting, potentially going public, and of course, everybody's thinking about where they can get their job. So let's dig into BlackBerry. How'd you come across it? How did the book come together? Gather your thoughts.
Sure. Well, when I started at the Globe and Mail, it was early 2012, and I didn't really have a mandate. I didn't have a specific job for the first 8 or 9 months. I could be a reporter at large, essentially, which was wonderful because it meant I could write about all kinds of things. I wrote about what happens to old Kentucky Fried Chicken outlets when they kick the bucket and repurpose the real estate. I was writing about immigration. I mean, all kinds of things. And being in Ottawa, the Ottawa area, which is where I live, I picked up the Ottawa Business Journal, and there was Shopify on the front cover, and I was vaguely aware of the tech scene here. I had recently moved back, and so I wasn't really aware of what had happened. So I started to write a little bit about tech because I'd written about tech 12 years earlier. It was an area I was somewhat familiar with. And I did a piece about venture capital because the venture capital industry in Canada was in a bleak shape, and the Conservative government had just announced a big program to help finance venture capital, the industry. I wrote a piece about that, and I get an email from someone claiming to be Jim Balsillie. Hello, I'm Jim Balsillie. I don't believe we've ever met, but I used to be the head of research in motion. I saw your piece, and he wanted to talk about intellectual property. Well, first of all, I'd never met Jim. I was vaguely aware. I mean, RIM had BlackBerry was, they had just left. He and Mike Lazaridis. Everyone wanted to know what had happened to the company, and I didn't actually think this was the real Jim Balsillie. It would be like if Jensen Huang or Elon Musk sort of cold called you, and you're like, "Really? Is this the real deal?" So I said, "Yeah, sure. Well, listen, maybe we could meet sometime." And he said, "Well, I'll be in Ottawa in 2 days." So I show up at the Chateau Laurier, and there's the real Jim Balsillie. He's dressed in a Navy uniform. He was an honorary captain with a little, Balsillie name tag. And I couldn't believe it. And, everyone wanted to know at that moment what had happened to BlackBerry. And he didn't want to talk about it. He wanted to talk about IP. So for 55 minutes, we talked about intellectual property. Most of it went right over my head. I mean, he was really steeped in that issue. And in the last 5 minutes, I said, "Hey, do you think you'd ever want to talk about what happened at RIM, BlackBerry?" And he said, "No, I don't want to do that. I don't want to destabilize the company." And that's fine. So for the next 10 months, we traded emails and phone calls and just talked about IP. And that was it. I'd see a story in the New York Times. He'd send me a report. It was amicable. BlackBerry was a no-go zone. And then the company announced a strategic review 10 months later. And suddenly the door opened up. And he was suddenly then willing to talk a little bit more, but cautiously. He put me in touch with some people. I reached out to Mike Lazaridis, who had just left the board and was unhappy. So Mike amazingly agreed to speak with me for 3 hours. I was able to get Jim on the record. Some of my colleagues had been working on trying to figure out what had happened to BlackBerry. Anyway, in September 2013, we were able to piece together the first comprehensive look at what had led to BlackBerry's downfall, all the seeds of it. And that story was a sensation. I've never had this happen in my career. That story had something like 1 million hits in the first 3 days. And every one of the world's business news sites and newspapers wrote a piece about our piece. And Harry McCracken, who was a Time magazine tech columnist at the time, wrote a little column saying, about the story and saying, wouldn't it be great if the people who wrote the story did a book? And like 2 days later, an agent reached out and said, "Do you want to do a book?" And so that's how that happened. And, it's funny. If it had been a Canadian agent and just a story for the Canadian market, I would have maybe been a little less convinced. But this was a serious Washington agent. He'd represented Bloomberg reporters, Wall Street Journal reporters who'd written big global books on serious matters. So I thought, well, geez, I guess this is a global story. So Jacquie McNish and I ended up putting together a book proposal. We had book deals, multiple offers in both the United States and Canada. And, by January 2014, we were off to the races. Had a very intense 10-month experience where we interviewed Jim and Mike and about 120 other people, submitted a draft, I think that October, and the book came out in almost 10 years ago, May 2015. And, the book did extraordinarily well. It won the awards, as you said. And I think, I think both Jim and Mike were willing to participate because I think that company had become so, like twin towers, twin silos, that I think both of them actually learned something reading the book about what was happening on the other side. And, we had 3 questions to answer with this book. One was, how did this little company that started above a bagel store in Waterloo become a global giant that redefined human communications? And really they did. We would have no iPhones
Yep.
or Androids without BlackBerry today. and think about what that has meant for the world, both good and bad. So what led to what were the ingredients for the success? What led to the downfall and what happened? And also what happened to this core relationship between these two people who could not have been more different? And because we knew that they weren't talking anymore, but we didn't know why. And that was probably the hardest question to answer. And it's interesting, like the movie is not, the movie is quite fictionalized, I mean, you really do need to read the book to get the true story. But some of the themes they picked up on are interesting, and including the one on what led to the split between the two of them. They do their own representation of it, but it definitely revolves around the options pricing scandal that led to led to them getting getting penalized by the SEC and the OSC.
Yeah, we actually wrote about that before they found before the regulators found that. So why don't we
You
just
guys wrote some great stuff about BlackBerry.
yeah, we had worked together on Nortel, on BlackBerry. Okay, why don't we just? I think look, I want to know. I'm sure all our listeners want to know, and what those watching is, what are those three things? So in your own words, what did happen? What led to the downfall, and what caused the bifurcation of that great relationship?
Well, like getting it done was a combination of great scientific, R&D scientific minds. Like they had to figure out a fairly complicated system to make mobile data work, and this whole science behind that. We kind of go into that obviously in the book. But the key thing was making it all look really simple. Like, email was really coming on in a big way in the late 90s. We remember that, but some of your younger listeners or watchers won't appreciate that. But suddenly
Yeah.
the world was awash in email. And, we had dial up and it was painful. If you were traveling all day, you would get to your hotel room at the end of the day, dial up, wait 5 minutes, log in, and then 100 emails would spill into your inbox. And BlackBerry gave people, and that was the killer app, was email on the go. You could get email. We take it for granted now, but the idea that you're in a taxi cab or in an airplane lineup or in a boring meeting, and you can address messages as they come in, was a major thing. And it meant that all this downtime in your day of a busy person, you could fill it by responding to emails. And in fact, some early customers felt it was such a competitive edge that they didn't want anyone else to know that they had Blackberries. That was their edge over their competitors, that they could cut deals and address issues promptly. And they were smart. They got it into the hands of the right people early on: deal makers, CEOs, investment bankers, and lawyers. And when the CEOs saw their investment bankers and lawyers with these Blackberries in their hand, they said, "What's that?" And pretty soon, Jack Welch has one. He was the CEO of GE at the time, and he was the Jensen Huang of his time. The big dog in commerce, in business. And people would see him on the golf course and say, "What's that? What's that?" And pretty soon, 15 assistants would get a call from the CEOs, "I need a BlackBerry right away." And suddenly, when you could respond to emails right away, you wanted your direct reports to be responding right away, and then their direct reports had. So it was easy to use. The original BlackBerry was a masterpiece of simplistic design. They really simplified a lot of things and made it really easy and addictive to use. It was addictive to use. It was easy
A
to.
QWERTY keyboard,
Yeah.
instead of like using the numbers when we first started, using pagers. Remember that?
Oh yeah. And it was easy and fun. I mean, like, if you didn't live through the early 2000s, you can't appreciate just how. And it was the status symbol. And what happened? I mean, technology advanced. Apple was eyeing this market. BlackBerry was the first company to really successfully commercialize mobile data the way they did, and Apple saw a big market and felt like they could leapfrog over BlackBerry and really make it a software-based product. And the problem for BlackBerry, for Research in Motion, was that the BlackBerry device was really a glorified radio that did one thing really well. It allowed you to send messages, send and receive messages. You could do your calendar as well. And they were happy to live in a world defined by the telcos, who didn't want their handset makers to have any direct relationship with the customer. So, an app store in the early 2000s was, 90, you take a song, and clip it for 10 cents for 99 cents, and that was your ringtone. And brick breaker, was that what it was called?
Brick breaker, yeah.
Simple games. It's very
Yeah.
simple, rudimentary games and ringtones, and that was it. That was kind of the and Nokia even tried to do a more advanced app store, and Verizon punished them. So BlackBerry was happy to live with that. They had a Java virtual machine operating system. It was a very skinny operating system. It allowed the machines to be efficient. They didn't burn through a lot of batteries, etc. And then along comes Apple with this rich device. It puts the whole internet in your hands. You can browse like as if you have a browser in front of you. And again, we take this all for granted now. And the folks at BlackBerry, the first thing they said was, well, we've seen this movie before. Palm Pilot tried this, and other devices tried this around the 2000s, and you couldn't put a whole computer in your hands. It made for a slow device that ate up a lot of data, ate up a lot of battery power, and we beat all those competitors handily. So we don't think anyone will want this. And they were wrong, because once you put the internet in people's hands, and customers didn't care that they were going through batteries quickly. They didn't care that they were gumming up the networks. They had a new paradigm and they loved it. And you know what? BlackBerry had a new paradigm and its users loved it. And sometimes it doesn't matter what the inconveniences are that get dragged along. If people love what you're offering, they're going to leap to it. And the technology was advancing along everyone else. And so by the time BlackBerry reacted and said, well, I guess we'll try and match these new software-based phones that really don't have as much to do about the device as they do about the software platform. The devices just happens to be around it. They were too late. Their approach was the wrong approach initially, and it took them really 6 years to come up with a proper competitive response to the iPhone. And nobody has 6 years in tech to come back with a proper competitive product that matches where the market is going. Anyway, that's like a summary of part of 250 pages. This is my little ad for
and then just end off. What about the relationship between the two?
They had nothing in common really as individuals. They could finish each other's sentences as co-CEOs. That company went through a lot of carnage on the way down.
Oh, yeah.
The relationship was really hurt by the stock options pricing scandal. We go through that in the book. And really, I don't know if this has changed in the last couple of years, but they really didn't talk to each other. I think they saw each other once after they left the company, and really they kind of stopped communicating and went off and did very different things. I mean, Jim is still very active in the Canadian ecosystem. He's with the Council of Canadian Innovators. He writes great editorials about where tech policy should go, and he's the chairman or on the board of Magnet Forensics. So still very active in the Canadian tech ecosystem.
Okay, let's transition to where we are today in tech. You have done so much writing. I love that you're focusing on entrepreneurs, and you've done so much writing with a number of these companies that you've seen from the time that they were working above a bagel store and now have gone public. Why don't you talk about sort of the key trends you're seeing today, and sort of where, as investors, we should be looking?
Yeah, for sure. I mean, one thing, so you referenced a story I wrote in December called Welcome to the $100 Million Club. And the point of that story was to tell readers, hey, we have a lot of tech companies that have reached a critical size in tech, which is 100 million in revenues. Now, 100 million in revenues is different depending on what company you're talking about. If you're talking about, and we're talking specifically about privately held tech companies,
Yes.
I mean, if you make hardware and you charge and you make $100 million, that's different than if you're selling software. But still, I think, so it's not a perfect measure, but still it's a good yardstick. 100 million is a substantial size for a company. And, when I started writing about tech for the Globe in early 2012, Nortel was dead. It had been dead 3 years. Research in Motion, BlackBerry was, on the rapid decline. And most of the other tech companies in Canada were small, underscale, underfunded, undervalued, and prone to foreign takeovers for pennies on the dollar. Some would argue what they were worth, and it was a hard sell for my editors for the first few years. But I kind of said, look, if let's stick with tech. I mean, it's really a software world now, and you can start a company for much less than you used to. There's venture capital that's coming into the country, and tech companies are fast growing companies. And, I'm going to be writing about $5 and $10 million financings, but pretty soon that's going to give way to $50 and $100 million financings. And these companies are going to ramp up and become public someday.
Yep.
And sure enough, I mean, we had a real, the 2010s was a real prosperous period for Canadian tech. They went from these little companies, startups, to quite a few, a good critical mass of companies, some real great tech ecosystems in Vancouver, Toronto, Montreal, and even secondary and tertiary centers. Kelowna has a tech scene, Calgary, which is sort of a secondary market for tech in Canada. Tech is everywhere. Halifax, you name it. There are tech players here. And then in the pandemic, what came to pass was this explosion of IPOs. We had 20 tech IPOs from mid 2020 to late 2021. Unfortunately, most of the ones that went public were under scale, they weren't profitable, and they were taking advantage of extremely high valuations because everyone went digital and worked from home. So unfortunately, that class of IPOs has been a bit of a disaster. 11 of them of the 20, have either left the public markets or are now on their way out. Of the remaining 9, you could argue that several are probably going to privatize as well for much less than they went public for. There's only a handful that have really been solid winners. So I think that left a bit of a sour taste with some people. Certainly the last 3 years, since the specter of inflation gave way to the threat of rising interest rates, that fear took over the market in late 21. Stocks of tech companies crashed, and then the following May, interest rates started to rise. And with that has brought a real winter for tech companies. So companies that raised money at high valuations have struggled. Some have had to recapitalize at much lower valuations. Some had trouble raising money. Private equity is there waiting to pick off companies at bargain prices. If you need money, if you need to raise money to become profitable and there's no money, well, your options dwindle and you have to take bad deals. So that's kind of been the landscape. It hasn't been a happy landscape. We've had a few big failures in Canada. I've written about some of them. And then, add to that, this Liberal government in Ottawa that came on as the innovation government, and there was a lot of promise. A lot of their innovation programs didn't really deliver, pan out, were sort of really were disappointing. And then last year, the government decided to increase capital gains taxation. And, for a lot of tech entrepreneurs, that was seen as kind of a middle finger from Ottawa. To raise capital gains on people who are putting everything into building companies, and the rare ones that actually succeed, the government's going to take a bigger bite. A lot of tech entrepreneurs felt that that was a message that Ottawa really didn't care about value creation, didn't really care about a prosperity agenda. And it sent a very bad message. And what I've been hearing in the ecosystem is just a lot of negativity in the last year. Again, part of it is fueled by, it's been a tough 3 years. And then part of it's by, we have this government in Ottawa that has a tin ear to what we think is important to turning this frozen country that, has to sit next door to the biggest economy in the world. All hands should be on deck to make this a prosperous nation. And they felt that this was a giant step backward. So a lot of entrepreneurs have been have been very bitter about Ottawa. Many of the youngsters are leaving, starting their companies, moving their companies out right down to San Francisco, Boston. It's not a happy story.
Really?
Meanwhile, so back to this 100 million club, I had been starting to notice and track all these companies that I've been writing about and following for 10 years. And I was like, it's an awful lot of them that have hit 100 million in revenues. And I about early last year, I started to pick away at this and say, well, I wonder how many there actually are. Maybe there's 20 or 30 of them. And my list, I topped out at 71 for this feature. Like, wow, there's 71 tech companies that are private that, have hit 100 million in revenue, and there's probably more. And a lot of them are private capital backed. And you know what that means? If you've got private capital, it means you've got temporary capital on your balance sheet. And these venture capitalists and private equity firms are going to want to sell out at some point. And some of these companies are getting big enough that there's not just more private capital that can keep buying out the earlier private capital. So my thesis was, not all, but a significant number of these 71 are going to go public. And
Yep.
when they do, we are going to get, for the first time ever in this country, a wave of IPOs of at-scale tech companies that are profitable, that are growing, that have lots of optionality, that are the kind of thing that regular mainstream investors want to invest in. Because we've had two IPO booms in the last 25 years. The dot-com boom, the less we talk about that, the better.
Yeah.
Some of those companies were many of them were a joke. And then, as I mentioned, 2020, 21, you had a lot of these underscale, unprofitable companies that, as soon as the markets turn down, their stocks collapse. But, we have real companies that are real large size, and they're coming. They're coming for your portfolios. And, the McKinseys of the world, the CIs, the Franklin Templetons, they want to own these stocks. They want to own these stocks of prosperous at scale Canadian tech companies, and it's going to transform our public markets. And so, amid all this doom and gloom, I think there's a reason to be, in the long run, really excited because, the markets are cyclical. They'll turn back up again for tech. And we'll be right there with some really compelling names that will go public.
Are there certain sectors, names of companies that have really caught your eye in all the work you've been doing over the last 12 years that you want to highlight that we could keep an eye on?
Sector wise, like the great thing about these 71 companies is they're all over the map. I mean, like we have
You listed them in the article. We're going to put a link to the article. I think we
Oh
already
yeah,
did.
yeah.
I think Scotty did that, but you listed them in your online in your
Yeah, I
article.
mean, gosh, we have a couple of companies in geolocation. One is a global leader in telling customers where their customers are located, which is
Yeah.
important for streamers and online gambling companies. That's called GeoComply. GeoTab is a company whose technology is in 4 million, I think 4 million, maybe it's more vehicles around the world, including the
Yeah.
USPS fleet, Pepsi, the U.S. government. So they're a big player. They're based in the GTA. You've got StackAdapt, which is becoming one of a globally leading ad tech company. You've got big players in artificial intelligence. We've got a number of players in quantum computing, which could be
Oh
the
yeah.
next major tech wave. We have one company that's out there already called D-Wave. They're publicly traded. We've got three more coming that are building quantum computers. Xanadu in Toronto, Photonic out west, and Norquantique in Sherbrooke, of all places. So we've got, Canada's actually a major player in quantum AI, like I mentioned. And then on the biotech side, I also write about biotech and life sciences. There's all kinds of interesting companies there. So, it's pretty broad based and really interesting. And I think part of that is a legacy of the fact that we have world leading universities and great researchers here, and a renewed effort in the last 10 years to turn some of that fundamental science, some of that inventiveness into innovation and into commercialization. So I think that most wheel has has started, and I think we're going to continue to see the rise of the entrepreneurial class. Hopefully, with a regime change, which is probably going to happen in Ottawa, we're going to see less government spending, tax cuts, and maybe making Canada a bit more of a compelling place for people to start companies. And maybe we'll get some of those entrepreneurs to come back to Canada who've already left.
Let's here's hoping. So pulling this together further, what do you think's next for Canadian tech? And what do you think Canada can do? The regime change, I get, but what else? What else? What are some specific things that these entrepreneurs are telling you? I wish, and we got the tax point. But is there anything else that we could do as a country? And your listeners and those watching here, I mean, we're managing Canada's capital, and we have a lot of sway as a result. So hearing from you would be very useful.
Yeah, well, I think some of the major issues that the innovators have talked about for years, three of them really: access to capital, access to talent, access to market. So access to capital, we've got this venture capital program that started under the Conservatives. The Liberals continued it. It'll be interesting to see if the Conservatives, if they come back into power, which polls seem to indicate will happen, if they continue this program, because that's been a helpful program to stimulate the early stage investing landscape here. But I mean, you still got these major pension funds that don't really play in early stage finance. They do globally. I mean, CPP, for example, invests in global biotechs. They happen to have a couple of investments in Canada, but they don't have a Canadian
Yep.
mandate. And that's a tension point that's existed for years. And I think my sense is that a lot of the institutional capital managers don't really know how to or what to invest in the early stages, in the pre public market stages. And yet, venture capital and private capital has grown immensely in size. So I would think that more of the fund managers will dip their toe a little bit more, or probably should think about into private capital markets. I mean, Fidelity does it. There's a number of funds in the States like TCV that invest in both private and public markets. And so I think, I think that would probably be a trend that Canadian fund managers should consider as well. Because, I mean, investing in tech is high risk, but it's also high reward. And, I mean, the venture capital model is you invest in 10 companies, 3 or 4 might go to zero, 3 or 4 or 5 you might make your money back. And then 1 or 2 are supposed to be such an outsized winner that it pays for everything and then some. So that the risk-adjusted returns are compelling. That hasn't really been the case in the last few years. But, everyone probably needs a little bit of risk in a well-balanced portfolio. And I think it would be, with more and more of these Canadian companies coming of age, it would be, it'd be nice to see some of the private capital, or some of the institutional capital funders looking more here and not just being such a niche market. There have been a lot of efforts, particularly under the Liberals in the last year or two, to see what they can do about pressuring the public pension funds to invest more in early stage. I don't know that we're going to get that. I would think that that the pension funds would see that it's useful in their own backyard to invest in some of these companies. I can understand writing a $10 million check or even a $50 million check is kind of small potatoes for a ginormous public sector pension fund. But maybe there's ways. Maybe if they pool their money, maybe if 5 or 6 of the big funds were to pool their money into a couple of billion or $2 billion super funds, maybe that would make sense. But there's arguments on both sides. Like, maybe we're not mature enough yet as a market for that to be obvious for.
But we're not going to mature if there's no leadership taken to actually do something. Because you need to, when you started writing about tech, tech was, you didn't know what you were going to find. And then all of a sudden you look back, I love that part of the story. You look back over the last 10 years, 12 years you've been doing it, you go, wait a minute, that company I spoke to that was above the bagel store now has 500 employees and, has 200 million of sales. And oh my gosh, where did that happen?
And some of the pension funds have made some efforts some of the time. The case of Poe invests quite a bit. Michael Labrega at Omers was really smitten by young entrepreneurs and felt this was an important area. He hired John Ruffalo.
Yep.
Omers was a pioneer after the credit crisis in sort of helping to revitalize the ecosystem. BC Investment has made some moves there. CPP definitely has been doing a little bit more than it has. And teachers we just had a story, James Bradshaw and I, on Olivia Steedman, Teachers Venture Growth, and they've invested in a number of companies. But again, that's a global mandate. Some of their investments in Canada, most are elsewhere. And this is an area. It's such a disrupted world that the pension funds kind of have to be investing in the cutting edge, so they have eyes on where the world is going next. Because maybe all that money in real estate or infrastructure, who knows if those are good investments, if what's coming down the pike is going to turn those core investments upside down. So, it's a prudent thing for pension funds to be investing in, if for nothing else, to, have eyes on the horizon and what's coming at them. So anyway, that's one thing in the mix to watch for. But I think, most of your clients should probably keep an eye on some of the tech players, and everyone should be reading deep into the tech trends, because think about how much the world has turned upside down in the last 10, 15 years, thanks to the arrival of AI and mobile devices and cloud storage. I mean, that's upended a lot of industries, and some industries you wouldn't have even thought. Software is everywhere. Software is transforming everything. So you really need to be conversant in tech as a theme, as a broad investing theme, I think.
I know I want to keep it tight here, as our listeners usually keep around 40 minutes or so. But the topic I think that's on everybody's tongue, or the tip of everyone's tongue, is AI. I feel like we've reached a point where you just add either quantum to your name or AI to your name. Remember the days when we added .com
Right.
and the stock goes higher. And so, are you of the mind that that we're in the midst of that same feeling that we had 25 years ago when you and I were conversing about the names of the day?
Yeah, and in fact, I think when you look at AI today, like I would say the analog is like where we were in, say, 1997 or 98, early in the hype cycle that is, early in a fundamental change. Like the internet changed the world,
Yeah.
but for the first 5 or 6 years, 5 to 7 years, it was a real hype cycle. And a lot of the businesses that came along to try to commercialize the internet ultimately were a bust or failed.
Yeah.
But the world runs on the internet today. The promise of the internet was real, and the change was real, and the shift of economic activity was real and became real. Now we run our world on the internet. So, but like by 97, 98, it was a hype cycle. It was like a lot of people were running to the capital markets, and also I think what we were investing in back then were different parts of the stack, and it was the applications built on top of that ended up being where the real value kind of was built. And so now, I mean, like a lot of attention is on the language learning model companies and some of the early companies that are kind of replicating what we already do with AI. And I think some people would argue that AI is definitely going to transform things. It's already starting, but I think you really need the young entrepreneurs to kind of think AI. You need like AI native people, to really think ahead and create new businesses, new business models kind of from scratch. And I don't think we're there yet. So I think we're still, so that would be my analog. I would say AI is like in 97, 98, maybe.
So you think it still has some ways to grow?
Yeah, and I think we're going to see a massive pullback. I mean, I think we're going to see a huge sell-off at some point. I think the market could retrench quite violently. Could. You never know,
Yeah.
but that's not going to mean AI is dead. It's just
Right.
going to mean that the hype, it's like quantum stocks right now. Quantum stocks, some of these things are trading for like 5, 10, $20 billion market caps. And like they're not making money, but quantum technology is coming. It's going to transform the world.
Yes.
And some investors are going to lose their shirts along the way. But that doesn't mean quantum is a failure. It doesn't mean AI is a failure. It just means the hopes and the hot money are going to do what hopes and hot money do. It's like radio in 1927 helped fuel the run up that led to the Great Depression. Was radio a great technology for the next 100 years? Yes, but
To your point, but radio, you imagine what the Second World War would have been without radio,
exactly.
and being able to listen every day at what was going on. Sean, pulling it together, finishing off, advice you have for aspiring journalists and business leaders.
Well, journalism remains a hard, challenging field. I mean, it's still
Yeah.
retrenching. We're still going through this difficult transition. Print is probably withering away to some extent. I don't know if it's going to completely disappear or not. Conventional broadcasters are retrenching, so it's a tough business. You have to be really committed, and you have to have a strong stomach. I mean, even in my day when I was starting out, it took me a few years to get established. But the good thing about journalism is, I think we still do a very important public service. And I hope that the new and sustainable business model presents itself. I think we're still going through a big transition. But, Noah Harari put it very well in Sapiens. I mean, the thing that distinguishes humans from other species is that we are storytellers. And a good story, and he makes the point, what are nation states, religions, and corporations, but not stories. They're stories we tell. We put legal structures around them, but they're abstract notions. And that book kind of changed my thinking a lot. And so I realized that, yeah, I'm a journalist, but I'm also a storyteller. I get to make a living telling stories, which is amazing. And if there's a market for your stories, then that's what you want. And as long as we remember that we are storytellers, not fiction storytellers, obviously, but we are telling people the story about what's happening in the world. And as long as we can continue to do that well and focus on that, there's always going to be some market for what we have to offer. And for journalists, I would say if you can keep in mind that you are a storyteller and you can make yourself to being the best storyteller you can be, there will always be a market for your services. It might not be as a journalist, it might be as a communications manager or as a strategist, or maybe as a CEO. I mean, the best CEOs are great storytellers. It's the way we communicate with each other. So I would say to anyone in journalism, even if you don't make it as a journalist, if you can practice this profession for a few years, get better at it, there are lots of things you can do with a journalism degree, lots of things you can do with some journalism experience. I'm fortunate. I've been able to build most of a career. I took a little break for a couple of years, but most of my career has been in journalism, and I'll probably finish it in journalism. And it's been rewarding and interesting. And I'd like to think that that will continue to be the case. It's not as many jobs in journalism as there once were, but glad to see the industry is still keeping people informed. Still hated by some politicians and other critics, but you know what? It's been like that for decades. That's probably not going to change either.
So then, and if anyone has any questions, please just type them into the chat. But your favorite book, or the book you'd like to push forward here, would that be *Sapiens*, or do you have another one for us?
Yeah, everyone should read *Sapiens*. I've got two others for you. A really wonderful book is called *The Rise and Fall of American Growth* by Robert Gordon. It's his life's work. Super compelling book. It makes the case that the world changed. You really have to look at the period 1870 to 1940, and then up to 1970. And he makes this really compelling point that you could take someone from the modern day and drop them into a home in like 1940, and you could mostly figure your way around. Obviously, there would be no internet,
Right.
but most of the technologies we use now, refrigerators, washing machines, running, and things like systems, call it running water, existed in a 1940 home. But he says if you take someone from a 1940 home and put them in a home in 1870, they'd have no sense of their way around. Water had to be brought in and out. There was no plumbing. And it's a really interesting book that reminds people of how far we've come and how, it makes you question how some of the innovations make you question, are they really improving human life? Are they really improving the life of the planet compared to some of the changes that we had, going back into the 1800s? A really interesting book. It's a big book. It'll take you months to read, but I think about that book every week. And then another great book, if you like biographies, everyone likes biographies, the biography of Walt Disney by Neil Gabler, Gabler. Super interesting read. One thing you don't appreciate is that Walt Disney, for most of his life running that company, that was not a successful company. He was that company had its ups and its downs. It revolutionized culture. He got involved with the American government as an emissary to help deliver American culture strategically during the Second World War. All those movies that came out of South America, that was part of the U.S. government's efforts to win over Brazil and the South American countries to the Allied side. So you get all of that, and it's the ultimate book about the ultimate entrepreneur, warts and all, and it's a really terrific read.
Nice. Favorite breakfast and favorite breakfast restaurant?
Well, this is very radical and weird sounding, but I'm on a real greens kick these days. So I'm making myself, don't be grossed out, spinach salad. I cut in some pickle and a sun-dried tomato and a little avocado. And then I follow that up with 2 hard-boiled eggs. That's what I'm doing now. It probably sounds crazy, but it's working for me. And favorite breakfast place, I'm a real sucker for a Fairmont brunch, whether it's the Chateau Laurier or the Royal York. It's a little posh, but it's the crepes and their maple butter are just they have no peer.
Sean, congratulations on a great career here that you've built, keeping us informed in Canada, and keep it up. We need independence, we need thoughtfulness, we need questioning of what's going on around us. And all of you, thank you for joining. Next week, we're going to have Melanie Paradis. And she's very interesting because she's worked both as a government aide, helping with media relations, and she has a weekly talk show on CTV where she goes through and talks about what's happening in politics today. So we're going to unpack some of the things that Sean mentioned about what's happening in our current government. So thanks, everyone.
Thank you.